Homebuilders raising the roof after beating earnings estimates. The homebuilder ETF coming off the best day since 22. Of course, Horton and Pulte both jumping double digits. But earlier this hour, we did get existing homes, and we saw a big miss, down 2.7 month on month in the month of June. Joining us here at Post 9 is UBS homebuilders analyst John Lovallo. It's great to have you back, John. Welcome.
Thanks.
Were you taken by, we were trying to figure out yesterday if this was about incentives working or just people moving on with their lives at these rates. What happened yesterday?
I think it's a few things, right? I think consumer confidence is beginning to improve, which will potentially bring potential buyers off of the sidelines, which is a very good thing. But just as importantly, investor sentiment is starting to improve. And I think that there's a view that this quarter will represent the last cut for the home builders. And I think as we move into 2026, there's growing optimism that the housing market is actually going to improve. And so it's a combination of that and positioning that drove the move.
So not necessarily hopes for a relief in rates, for example.
We're not forecasting that at all. In fact, I don't think we need it. I think what we need is stabilization in rates. With this volatility, it's very difficult for the home builders to plan a business. It's very difficult for consumers to make a decision on, the biggest purchase of their lives.
Right. So are they doing anything tactically regarding the makeup of a house or square footage or the amount of yard you get, anything like that will entice buyers?
I think the builders have been very creative and very reactive and responsible in how they're handling the market. They're building smaller footprints, fewer SKUs, if you will, so fewer floor plans, which just makes the build process much more efficient. And they're doing it in smaller footprints that are more affordable. And on top of that, offering financing incentives for the buyers that's helping to kind of solve for that affordability equation.
We, of course, keep watching. I think, what's lumber up for the year? 30%?
20 to 30.
Is that manageable?
We're still in the 420, 425. It's in a very decent range. Interestingly, stick and brick costs, so labor and material costs for the home builders, are actually down on a year-over-year basis by low single digits. So again, the builders have been very efficient and very productive in the way they're managing the business.
What about this idea that the president floated yesterday when he was taking questions with the president of the Philippines about eyeing, eliminating capital gains for selling homes? Is that possible?
Anything's possible in our world today. I think, look, anything that puts incremental dollars in the hands of the consumer is a positive. Now, whether that's reducing the SALT, or increasing the SALT deduction, or tax breaks, things of that nature, anything that gives more money to the consumer makes a home purchase more palatable.
But with that, do you have any sense of how stimulative that could be for the housing market?
We haven't run the numbers yet, but yeah, clearly it could be accretive, but we don't have the numbers offhand.
All right, so what about the stocks themselves? And we mentioned D.R. Horton reported, I guess, yesterday. Stocks down 15% over the last year. Obviously strong yesterday, but down today. What's the beneficiary, to the extent there is one right now, given the environment you described?
Yeah, look, I think most of the public builders are very well positioned to continue gaining share, for one, from the public builders. They're now, the top 16 builders are about 50% of the market. So they have a lot better access to land, labor, materials, and financing. Plus, they have the balance sheets to offer, the financing buy downs for the builders. For the buyers. So I would say that the home builders in general are very well positioned. We still like the low end entry level. So that would be a D.R. Horton, as you mentioned, or a Meritage Homes that reports later today.
Finally, is immigration or labor availability, is that material to results lately?
Look, there's a real shortage of labor in the market. That's been going on for a decade. But this incremental kind of immigration crackdown has really not caused any disruption as of yet. Not to say that it won't as we move forward, but so far so good on that front.
Right. Certainly a lot of inputs to keep in mind. And we always say housing punches above its weight when it comes to the economy.
That's right.
John, thanks. Good to see you.